I know there was a lot of disappointment this week in the precious metals community because of a failure of an attempt to squeeze the silver shorts on COMEX. Last weekend, many of the major online brokers sold out of inventory for retail bars and coins. There were great expectations that retail buying was going to break the back of the silver contract short sellers. What ended up happening was we ended up with a blip in the silver spot price of a few dollars until it just about touched $30 per troy ounce. And then the price fell back down during the course of the week to about $27 per troy ounce, where it pretty much started. I wanted to spend a few minutes to give you my take on why the large buying in the retail market didn't move the spot price much. Now, don't take this to mean that I'm not a fan of the precious metals. I might be one of the biggest fans out there, and I've been buying precious metals for more than 2 decades, but I'm also cold and calculating. I like to analyze the data because I found that emotion in the metals usually leads to bad decision making. So let's dig up some information on some of the more popular retailers out there who were having trouble keeping up with orders this past week. Most of these retailers are private companies, and so they will not publish annual reports that are available to the public to see. However, they also require a certain amount of debt-based financing, and so some of their key financial information is available through Dun & Bradstreet reports. Here is one for one of the largest online retailers. This is Minero and Meto Kitco Inc., also known simply to us as Kitco. According to Dun & Bradstreet, they do $125 million in sales each year. Now bear in mind, this is total sales, which includes vault services, jewelry sales, scrap refining, and other things. It's a big business, and the precious metals retail sales portion of this amount is spread out over all of the precious metals, not just silver. I pulled Dun & Bradstreet reports from many of the popular online brokers. Let me show you a summary. JM Bullion is one of the biggest because they have many subsidiaries. It does $660 million per year in revenue. Kitco is somewhat close at $125 million of revenue. Then we have APMEX at close to $8 million per year of revenue. Now this surprised me a little. I thought that APMEX was bigger than this. Then we have Provident Metals at $480,000 per year, but Provident is a subsidiary of JM Bullion, and so we can't really include them separately because it would be double counting. SD Bullion has $337,000 per year in revenue. Compared to JM Bullion and Kitco, we may as well not even consider these other companies because they are all so small in comparison. Now, if we consider the close to $800 million per year in revenue of the big two, we need to be cognizant of the fact that it also includes jewelry, scrap refining services, and vault storage services. I imagine they also generate quite a bit of revenue in other ways. Of the remaining revenue that can be assigned to the precious metals over-the-counter retailing business, that would be spread out over gold, silver, platinum, and palladium. So let's make a generous assumption that $300 million of silver coin and bar are sold by these retailers each year. I'm picking this number of $300 million because it makes the math convenient, since retail silver is about $30 per ounce. Not because I think it's even close to the right number, which is probably much smaller. But since we're not considering all of the global companies worldwide, I'm comfortable with going with $300 million. So if over-the-counter silver coin and bar sales is $300 million per year, this would be about 10 million ounces of silver sold each year. Now, how much silver do you think these companies keep on hand in inventory? It would surprise me greatly if they maintained as much as 1 month worth of silver on hand. And the reason for this is that the larger the working capital of a company is relative to its sales, the less profitable it's likely to be. Inventory costs money to store, insure, and hedge. But let's play devil's advocate and assume that they keep 1 month worth of inventory in stock. This would be 1 million ounces of silver. It's not a large amount. Is it any wonder a spike in demand caused these companies to sell out quickly? Now, let's bounce over to the COMEX and see how much inventory they have compared to what the retailers probably have. I pulled the metal depository statistics released on Friday this past week. I had to hide a few rows to be able to show the report, so don't worry if the total at the bottom here doesn't add up to what's reported by all the vaults, because not all the vaults are shown here. The important number is at the bottom. It appears that audited inventory of investment-grade silver in the COMEX vaults totals 398 million ounces. This is a pretty large number compared to the 1 million ounces of small coin and bar that might be held by the two largest online precious metals retailers. But we also know that COMEX is pretty small compared with LBMA. So let's go over to the LBMA and see how much they report to have in store. According to LBMA reports, there are 33,608 metric tons of silver stored in their vaults. After converting this to troy ounces, we can see that they store over 1 billion ounces worth of silver. That's a lot of silver, and it's audited. Combining the total investment bar inventory of COMEX and LBMA, we can see that there are about 1.4 billion ounces of silver stored in the vaults of these two entities. It's a deep market. So the 1 million ounces of silver that I suggested might be held in inventory at the two largest online retailers at most is only a very tiny fraction of what is stored at LBMA and COMEX. It would only be about 0.07%. Now, was the heavy buying this week meaningful? Sure. It was enough to move the price up a few dollars. But then, I wonder how much of this was due to the large interests allowing the spot price to increase due to retail investor excitement, knowing that they could use the opportunity to sell short a little more metal at higher prices to profit as silver prices fell back down to its starting level. Now, all that said, I do think that it's worthwhile for small investors to buy silver and gold. It's true wealth in my mind. It's a great way to save and accumulate wealth. But based upon what I saw this week, in order to drive the price of silver higher, there will have to be many more people buying silver over a sustained period of time of years, not days. Can it happen? Sure. I think the several precious metals channels out there on YouTube are doing a great job trying to generate interest in the precious metals. But this is not going to happen in a week. Keep stacking, folks. We'll get there, 1 ounce at a time. But it's going to take persistence.